the reality is the trade deficits are the symptom of the problem. The problem is here in America, and we're not getting ripped off by anybody. Nobody's cheating. The problem is we as Americans, for decades now, have lived beyond our means. We consume more than we produce. Now, how is that possible? Well, we go into debt. We sell off our assets. We outsource our manufacturing, and we borrow money. And, we get to live a standard of living that's higher than what we're really entitled to based on our collective productivity. Now, it's the rest of the world that makes that possible. They produce what we don't. They buy our assets and they loan us the money. And so what does that mean in America? Well, we have more stuff to buy at lower prices. We get lower interest rates because of all this foreign capital, and our stock prices are higher. So we get to be rich on paper because we have a high stock market, and we get low interest rates and low consumer prices. Now, according to Donald Trump, that's the world screwing us over, ripping us off. And he wants that to stop. Well, if that stops, well, now, the ride on the global gravy train is over. We can't live beyond our means anymore. So we have to live within our means, which means we have to consume a lot less. We have to save a lot more. It means that our interest rates go way up because we're no longer borrowing all this money from foreigners. Our consumer prices go way up because we're no longer getting all their stuff. Our stock prices go down because they're not buying our stocks. So Americans are going to see a huge decline in our standard of living and a big drop in their net worth. But I mean, that's liberation, right? Mm-hmm. That's, I was warning that Trump was threatening to liberate us from our standard of living and liberating us from our stock market wealth. and that's what's happened. And it's just starting. This is going to play out for the rest of the year, next year. This is a huge trend that's just going to get more and more momentum. Well, gold's up over $250 in the last 3 days. Yeah. Right. So we're accelerating. 2 days, last couple of days, we were $100 a day, and maybe we'll be up again. Maybe we'll be up another 100 by the time they close today's trading. But what's happening, and what I've been telling people was happening all last year, as the price of gold went from 2,000 to 3,000, and nobody cared, and nobody was buying it because everybody was sidetracked by Bitcoin and all the talk about digital gold. Nobody but foreign central banks were buying actual gold. And the reason they're buying gold is because they're getting rid of their dollars. They are preparing for a world where the dollar is no longer the center of the monetary system, where it's no longer the reserve currency. And so if you're going to get rid of dollars, what do you replace it with? Well, gold is the most likely alternative to the dollar. And that's what they've been doing. Although I think recently central banks are probably also adding euros. My guess is that the Bank of China is buying euros as it may be selling dollars, because I think they need to replace Americans as customers. And the Europeans, there's more Europeans than there are Americans. And now that the euro is at a 3-year high and soaring, the Europeans are getting richer as Americans are getting poorer. And so all those goods that China can no longer export to America, they can export those goods to Europe. And as a matter of fact, China is not going to be importing any more goods from America. And so they're going to import a lot of the agricultural products or other raw materials that they used to get from us. They're going to import them from South America. And so now those countries are going to be richer because they're going to have more export earnings. And now they're going to be able to afford the goods that China is no longer shipping to America. See, Trump really overplayed his hand. He thought he had the cards. He had nothing, because it's easy to replace consumption because anybody can consume. We don't do anything hard by shopping. The hard part is production. Supply is what creates demand. It's easy for China to consume what they produce or to trade what they produce with others. What's impossible is for America to consume what we don't produce. So at trade ends, America is stuck. All we have is paper. And that's why inflation is going to go through the roof in America, because we're going to have all this money with nothing to buy. And eventually Americans are going to start buying gold. I mean, they've been selling gold. They've been selling gold stocks. But, I've been telling people to buy gold, for over 20 years. When I first started recommending physical gold to my clients, it was under $300 an ounce. It's gone up more than tenfold. In fact, gold has outperformed the stock market for the last 25 years dramatically. I think the S&P is down maybe 65% priced in gold. So the whole bull market is an illusion created by inflation. Gold lets you see economic reality. But really, for the first time in my career, I'm actually telling people that for now, don't buy physical gold. Just wait. Because even though the gold stocks are at new 52-week highs, and they're up maybe, I don't know, 15, 20% this, and they're jumping finally. But gold stocks are much lower, than they were a few years ago, or 10 years ago, or even 20 years ago, a lot of them. Gold stocks are dirt cheap. And the reason for that is central banks aren't buying gold stocks. They're just buying the physical gold. But they buy the physical gold that the gold mining companies produce, and their profits are about to skyrocket because oil has never been this cheap in history relative to gold. That is the biggest cost for these mining companies. They're trading at single-digit multiples. Gold mining stocks have never been this cheap, not only relative to gold, but relative to the S&P 500. They're giving these stocks away. When you buy gold mining companies, you're buying gold that's still in the ground. And gold in the ground has never been cheaper in all of history than gold above ground. And so what I'm telling people now is, look, I think gold's going higher. Gold could hit 4,000 this year, but that's not that big a gain from 3,250. But I think if gold does hit 4,000, gold stocks are going to catch up. That means they can go up 5x. So rather than making 25%, make 500%. By buying the gold that's still in the ground. So for now, I don't know how long this sale is going to be going on. I expect a ballistic increase in these gold stocks. That's what I've been buying myself mainly. I've been adding to my gold stock position, not my physical gold position. In early 2024, like February or March, they downgraded Newmont. They downgraded Barrick and basically to sells. And the analysts said, the reason we're downgrading is because gold's at 2,000 and we don't see any upside. Everybody thought 2,000 was the top. Yeah. And I kept saying, no, 2,000 is the new floor. And so Wall Street has completely missed the gold trade. They don't have any money in these gold stocks. Again, they bought Bitcoin ETFs and all kinds of crap. Bitcoin, since it peaked in November of 2021, is down more than 30% in relative to gold. So with all these ETFs, with Super Bowl commercials, with electing the first Bitcoin president, with the Bitcoin Strategic Reserve, all that hype, and Bitcoin has gone down by 30% relative to gold. And nobody wants to acknowledge that. Bitcoin is in a massive bear market, but that's one of the reasons that gold stocks are so cheap, because people that should have been buying gold stocks were buying Bitcoin, either through the ETFs or through MicroStrategy or any of this nonsense. I just came out with a special report. People can get it for free at Euro Pacific Asset Management, Europac.com, a special report, the best way to buy gold, in which I really make the case that gold mining stocks have never been cheaper than they are right now, and that's how you got to buy gold. Even though gold's going to go up, the gold in the ground could go up much more. And then, when you triple, quadruple your money in these gold stocks, which I think you could do very quickly, then take some profits and buy more physical. Yeah. Even if the physical has gone up, it won't go up nearly as much as these stocks. So it's like a once-in-a-lifetime opportunity to take advantage of the fact that everybody's been asleep. And, the central banks have been buying gold, and they haven't had any competition from private investors. Well, when private investors wake up, especially the endowments and the pension plans and then the hedge funds, when they finally realize that they've got it wrong. Remember, all the experts said that tariffs would make the dollar go up. That's how little they understand of this global relationship. Everyone, every single economist, every market strategist kept saying, tariffs are going to be good for the dollar. Tariffs are going to be good for the dollar. I'm the only one that said, no, tariffs will actually be bad for the dollar. And so when guys figure this out, they're going to start buying these gold stocks. You got to buy them first. Yeah, well, the year ahead inflation expectations now are 6.7%. And I mean, this is, the Fed keeps saying that expectations, long-term expectations, remain anchored at 2%. What are they talking about? Nothing is anchored at 2%. We've been adrift for a long time, and now we're at 6.7%. And you know what? It's going to be a lot higher than that, right? The Fed is completely wrong. It was about a year ago when Powell said, he laughed it off. Somebody asked him, people are a little worried about stagflation. And he said, I don't know what they're worried about. I don't see any evidence of stag. I don't see any evidence of inflation. And I said at the time that statement would go down with subprime is contained and inflation is transitory. It was something that was completely obvious that the Fed was oblivious to. And in fact, they don't even have a plan for stagflation. When somebody asked him about it at a press conference, he just knocked wood and said, well, we just hope it doesn't happen. And that's because they can't do anything about it. In fact, all of the stress tests that the Fed puts the banks through, when they have the most adverse economic environment, has interest rates falling sharply.